markets at noon on ET Now. Let's bring on board the management of Satin Credit Care Network. The reason the company is in focus is because it's raised around 120 crores through rights issue, and we're also interested in knowing what next for NPAs, for asset quality, because it's today when the moratorium period ends. What's the credit growth outlook like? What's the liquidity in the system like? So let's discuss all of this with Mr. H.P. Singh, the Chairman and Managing Director. Thank you for joining us today. So let's start off first with the overwhelming response received to the 120 crore rights issue. How are you placed now, post this fundraising, in terms of your liquidity?
Before the right issue also, our capital adequacy as well as our liquidity position was absolutely fine. But we wanted to do the right issue basically to raise the confidence capital during these time of crisis. And if you look at the raise which has been done by the right issue, though it's a very small raise technically, if you really look at the amount of liquidity which we have in our system, we have sufficient liquidity to service all our outside liabilities at least for the next 1 year or so. So that's how high our liquidity is, including the rights issue, which is now being prescribed.
Okay, all right. Let's talk about provisioning then. I mean, many analysts say that, in the MFI space, provisioning is a little lower because given the risk of increase in a credit loss. So where do you stand on provisioning, or have you been a bit more conservative and, ensured adequate provisioning or more than adequate provisioning?
So we have sufficient provisioning in our books, so we've done provisioning of about 80-85 crores in the earlier quarters, related even to the pandemic also. Our own sense is, looking at the way the collections have panned out after the lockdowns in the rural space, our sense is that we've had adequate provisioning even up till now, even because of the current pandemic and the COVID crisis as such. Coming back to the field now post the lockdown, I think the initial collections seem to be pretty well as compared to what we had earlier thought it to be. And looking at that also, I think, we have sufficient room to look at that the provisioning would remain adequate in terms of, how this crisis is also panning out and once the lockdown also finishes off.
Right. So what is the sense that you get in terms of demand? I mean, one would say that you're a finance company, but, with the sort of base that you have, the customers that you cater to, you tend to get a sense as to really what's happening on the consumption side in the rural areas, what's happening in terms of the, small business side in the rural areas. What is the sense that you get?
So predominantly, if you have to really look at this space for microfinance and including us, we are predominantly agri-based disbursement which we do. So most of our borrowers, which is about 76% of our total portfolio, is in the rural space. Having said that, if you have such a large portfolio in the rural space, the income is generated mainly from agri and agri-related activities. And looking at the way the Kharif sowing and the agri-related numbers which are coming up, the Kharif sowing has probably one of the highest in this year as compared to even the earlier years. The income flow from these activities are going to be is not going to be that disrupted, which you probably would find in the urban space, So small businesses, even in the rural space, are again aligned to what the agri and agri-related services are. So our sense is the way this would probably pan out in the rural space, I think it is going to be much better in terms of looking at whatever the credit cost could probably arise and the cash flow where it will emanate from these activities in the rural space,
Right. Also, if you could just talk to us about, the loan growth that has been happening. If you would have spoken in the month of April, you would have said everything is shut down, there is really no activity. Has the recovery been much faster than what you earlier anticipated?
So as I earlier said, yes, if you look at the pattern of collection after the lockdown, I think it's pretty been very positive to really look at that. And in terms of loan growth, I think, for us as an organization, we are looking at a consolidation phase at least in the next couple of quarters before getting into the loan growth, because what we feel with frequent even lockdowns coming on the weekends as the other things which probably are now being taken care of, after these Unlock 4 guidelines. Our sense is, I think, once we have a stable kind of an environment where we are able to look at disbursements also as well as recovery, I think it's going to be better. But having said that, we've done we've done disbursements in the last couple of months also. So not been on the regular phase of what we do or what we used to do before the pre-COVID times, But still the disbursement has started happening. And as, this consolidation phase and the phase post the moratorium really settles down, I think the growth will be back. But a couple of quarters, yes, are consolidation quarters.
Right, Mr. Singh. Thank you so much for taking out time for us. Always good to get perspective from you. That was the management of Satin Credit Care giving us a direct outlook as to what's happening on the ground. They cater to people, with direct consumption needs in rural areas. Also, their ticket size is not very high. And that's why, they just get a sense as to what's happening on the mass side. So they are telling us that things are looking better on the agri side, but let's wait and watch. Of course, the pickup has been faster than what they earlier anticipated. On that note, completely out of time, we're taking a break. Stay tuned. Ajay will take you through the next 30 minutes of the session. I and Mubina sign off.